Hello everyone, welcome back to our channel. Today we are going to talk about one of the hottest topics in the financial world, cryptocurrency investing. With the rise of Bitcoin and other altcoins, more and more people are starting to invest in cryptocurrencies. However, it's important to remember that investing in cryptocurrencies is not the same as investing in traditional assets. In this video, we will offer some advice and insights on how to invest in cryptocurrencies, including how to manage risk and build a diversified portfolio. Why invest in cryptocurrencies? Before we dive into the specifics of how to invest in cryptocurrencies, let's first understand why you might want to invest in them. Cryptocurrencies offer a decentralized, digital, and secure way of storing and transferring value. They are not controlled by any government or financial institution, which means that they are not subject to the same inflationary pressures that traditional currencies are. Moreover, cryptocurrencies have been known to offer high returns, making them a potentially lucrative investment opportunity. How to invest in cryptocurrencies? Now that we understand why we might want to invest in cryptocurrencies, let's discuss how to invest in them. The first step in investing in cryptocurrencies is to choose a reputable cryptocurrency exchange. Some popular exchanges include Coinbase, Binance, and Kraken. Once you've chosen an exchange, you'll need to set up an account and link it to your bank account or credit card. The next step is to choose which cryptocurrencies to invest in. Bitcoin is the most popular cryptocurrency, but there are thousands of other cryptocurrencies to choose from. It's important to do your research and understand the fundamentals of the cryptocurrencies you're interested in before investing. Managing risk. As with any investment, there are risks associated with investing in cryptocurrencies. One of the biggest risks is volatility. Cryptocurrencies are known for their price fluctuations, which can be extreme at times. Therefore, it's important to manage your risk by only investing what you can afford to lose. You should also consider diversifying your portfolio by investing in multiple cryptocurrencies and other assets like stocks and bonds. Another way to manage risk is to use stop-loss orders. Stop-loss orders allow you to automatically sell your cryptocurrency if the price drops below a certain level. This can help protect your investment from significant losses. Building a diversified portfolio. Building a diversified portfolio is key to managing risk and maximizing returns. In addition to investing in multiple cryptocurrencies, you should also consider investing in other assets like stocks, bonds, and real estate. This can help balance out your portfolio and reduce the overall risk. In conclusion, investing in cryptocurrencies can be a lucrative investment opportunity, but it's important to understand the risks and manage them accordingly. By choosing a reputable cryptocurrency exchange, doing your research, managing your risk, and building a diversified portfolio, you can increase your chances of success in the world of cryptocurrency investing. Thank you for watching, and we'll see you in the next video.